introduce Professor Gregor Schubert, who's an assistant professor at UCLA Anderson School of Management since 2021. So he has done, so he's an economist, has been, his research has spanned like many fields: housing finance, urban economics, real estate, labor economics, corporate finance, and today it's AI. So he has done a lot of like groundbreaking research in urban migration, housing market. He studied with the Harvard economist Edward Glaser and Professor Jeremy Stein, who's a finance person. So he earned his Ph.D. in a prestigious program of business economics at Harvard, at the Harvard Business School. He got the MS in Spain, University of Pompeu Fabra in Barcelona, I believe, and he graduated from Princeton. He also studied theater, I believe, from his bio. So he's presenting a very interesting line of research of the impact of the generative AI, things like ChatGPT on labor markets and on firm values. So just take it away, Gregor. Thank you.
Thank you for the introduction, and thank you for having me. I'm always excited to talk about this. And you can interrupt me at any point with clarification questions and so on. That's going to be more interesting than trying to wait until the end to clarify something. So feel free to just jump in at some point. That's also going to make it more interesting than me just talking, especially given that I'm used to talking to sort of narrow academic audiences, and so some of the stuff I say might not be that I think is not obvious, and vice versa. So just interrupt me as needed. So this research, of course, comes out of this general hype around generative AI. We started this research first last year around March, when a lot of the revolutionary nature of the technology was still a little bit under debate. There was a lot more early pushback in academic seminars around, isn't this just a slight variant of Google search? Like, what are you talking about? Who's going to use this? And so now this is a little bit easier when we present this research, because it's sort of obvious to people that there is a major impact. But the original motivation was to try to understand how behind the headlines of overall impacts on the economy and revolutionizing how work gets done across the world, what actual firms and which particular workers would be most impacted. So rather than talking about it at a general level of 300 million jobs or trillions of dollars of value being created, which particular firms can we pinpoint where this value would come from, and which particular workers are going to see benefits and disadvantages as a result of this kind of technology. And so when we think about this research, I think it's important to distinguish two distinct notions of benefits of generative AI for firms. The first one is what I would call generative AI as a general purpose technology. So general purpose technology is sort of a general technology that makes lots of aspects of the economy more productive, similar to steam power, electricity, large industrial revolutions of the past. And it's the kind of technology that's likely to affect all workers to some degree. So across the board, across the economy, you're going to see positive productivity impacts where many people get a little bit more or a lot more productive as a result of this. And so that's likely to impact a broad range of companies. And it's important to try to find out which particular companies are going to be impacted. Can we try to figure out which companies are most likely to benefit, and do you see that value actually accruing to the companies through their share prices? And then on the worker side, if lots of workers are becoming more productive, is that good or bad for them? There's always this big question of whether or not if your productivity goes up, is this technology going to be a substitute for you? So you the firm doesn't need you any longer, or is it complementary to your labor, where you're becoming more productive and as a result more valuable to the firm and to the overall economy? So that's the first meaning of productivity improvements, this general purpose nature. The one that's much more frequently in the news is the one where some firms benefit because they're directly contributing to the AI value chain, is the way I'd put it. So firms that are making or supporting AI technologies, semiconductor manufacturers, cloud computing providers, all the big AI companies, Microsoft or NVIDIA selling chips. All these companies are directly benefiting from the AI boom as well, but it comes from their product side. They're selling products related to AI, and that's what's going to be driving up their share prices and their values during this time period. And that is an important part of where value is created from AI, but it's a much more narrow focus, right? It's focused on a small number of companies that take up a large amount of real estate in terms of their prominence in the news, but in the long run, the bigger impacts on the economy are probably going to come from these broad technology impacts as a result of lots of workers becoming more productive rather than particular companies selling AI-related products. And so in this study, we're focusing on the first aspect, the broad-based labor side impact on productivity, rather than this more narrow impact on some companies suddenly can sell more products related to AI. The main thing that we find, I'll tell you in a second how we get there, but I just wanted to preview this a little bit, is that the firms that are more likely to have these productivity benefits on the labor side, so that are more likely to have workers that can be made more productive as a result of technologies like ChatGPT, saw a big increase in their share prices right after ChatGPT was released. So what's shown in this graph is it plots firms that are more exposed on the labor side to these productivity benefits that are shown in orange, and firms that are the least exposed to these productivity benefits in green, in the dotted line, and then the long-short portfolio, so one that buys the firms that are most exposed and sells the firms that are least exposed, in dark blue. So that sort of shows you the relative returns or the relative profits you could have made by investing more in firms that were more exposed on the labor side here to these technologies. Okay, and then how do we get there? So when I'm talking about firms that are more or less exposed, how does one actually measure this? And so part of this research is trying to figure out what is a good measure of exposure to productivity benefits at a firm level. And so we built this up in 3 steps. We first measure productivity potential at a task level. We then aggregate that into occupations that are using those particular tasks, and then aggregate from occupations into firms based on firm employment structure. So at the task level, we take data from the Occupational Information Network. This is public data that you can find that details 19,000 different tasks that workers might be doing in about 900 different occupations. And then we score each of those tasks for how exposed it is to productivity benefits coming from generative AI. This is actually an approach that we're taking from a paper that was published by some people at OpenAI, where they take an actual rubric of here are the kinds of things that GPT-4 is good at, and then matches each of those tasks against that rubric and says, okay, this, based on what this task sounds like, does this fit into these kinds of tasks that GPT can make more productive? And so this is sometimes so you should not think of this as just making up what things could be made more productive, or just asking a large language model, ooh, what could be made more productive? We're giving it an explicit rubric, and we're just asking it to basically match tasks to that rubric. But in this case, we are actually using a large language model to execute this task, because it's asking a human RA to match 19,000 tasks against a rubric would make that RA really unhappy with us and would take months and thousands of dollars. And so in this case, actually, there's a nice back-end benefit of these large language models in terms of making this research both feasible and more productive. In this case, research that is talking about the productivity benefits of AI.
Can I ask you something?
Yeah.
So how
Yeah.
reliable is that ONET database, and how often do they update? I learned about it like a few years ago, but I was surprised there was such a thing, because it's not easy.
Yeah, so it's actually, I find it quite surprising because this is a public good that's provided, but it seems pretty reliable. So it's used a lot in labor market research, and it's basically done by occupational experts. So it's these people whose job it is to try to figure out what workers do all day. And they survey people who are doing a particular job and ask them, what is it that you do on a daily basis? And they try quite hard to figure out what it is that is involved in particular jobs. There's sort of people who professionally do this. And they're sort of they're affiliated with the Bureau of Labor Statistics, and they just sort of put together this public information for everyone. I'm not actually sure who the intended target audience is, presumably labor market analysts and planners at the government level, but it's always been somewhat magical that this public resource exists. And they do update it quite regularly. So they put out a new version every 2 or 3 years or so, where they will update new jobs and change what the weighting of different tasks is within different occupations. So they try to keep it up to date.
Okay, thank you.
Yeah. It's quite nice that this exists at a public level. And it's quite detailed. It doesn't just have tasks. It also has like what particular skills are required in different occupations, and like how is your time allocated, what level of skills required, and yeah, it's quite nice. All right, so we score all these tasks against a rubric to say, is this the kind of thing that GPT can make more productive or not? And we just score is in 2 different ways. Either it's not exposed at all, it's out of the box exposed, so you could just fire up ChatGPT and immediately you'd get some productivity out of it, or it might require some additional user interface and connection to the internet and some proprietary data to be coded, but the underlying technological capabilities already there. It just will require some work on the part of your company to actually unlock that productivity benefit. All right, so what does this look like? So when we score these different tasks, this is the kind of response that we end up with. So for each occupation, for instance, telemarketers here at the top, we have a task, something like adjust sales scripts to better target the needs and interests of specific individuals. And then the large language model will score this. In this case, that's something that a ChatGPT can immediately add productivity to. And the nice thing about scoring this with a language model is actually that it gives you some explanation of why it thinks this is a plausible score, which allows a little bit of auditing on how the model is interpreting the question and whether or not it seems to be doing this right. Relative to asking a human RA to do this is a big improvement, because the human RA is not going to write me an explanation like this. And so this gives you some ability to early on iterate and try to make sure that you're getting the right responses here and that they're somewhat logical. Similarly, web developers writing supporting code, that's the kind of thing that's immediately scored as productivity increasing. On the bottom end is things like HVAC mechanics, physician assistants, sort of physical tasks where having access to an LLM is not going to make you more productive. And so this is just an excerpt here. We do this for 19,000 different tasks and come up with a score of how exposed they are. Then we aggregate those scores into overall occupation level exposures. And as you might imagine, at the top, you see a lot of repetitive white collar occupations. So telemarketers, proofreaders, programmers, word processors, those are all at the top in terms of most exposed occupations. The fun one in here is mathematicians. So
yeah, this is surprising, right?
it's kind of surprising. It comes from 2 facts. So we looked into this because we were also kind of surprised by this. It comes from the fact that when you're thinking of the occupation mathematician, that most of those are not going to be like university level mathematicians who are solving abstract algebra proofs. You have to think of this as including lots of people like actuaries at insurance companies and things like that, where they do a lot more repetitive tasks, and many of those tasks are not like come up with completely novel ways of solving this very complicated problem.
Or the human computers from the 50s, right? So maybe
yes, exactly. It's close to that. The other thing that I would say in this regard is that one thing that I always find really nice in that he's a sort of a cheerleader for this is that Terence Tao at UCLA, who's kind of a famous mathematician, yes, talks a lot about how he actually loves ChatGPT and gets a lot of utility out of it. And he says that in his like daily life, it takes over a lot of tasks that he does in terms of both his administrative work, but also early drafting of proofs, like just throwing out ideas to see what sticks, and then he gets some inspiration from that, or executing on proofs where he knows how to do it, and he just needs someone to actually like write up the algebra in some sense. Mm-hmm. He gets that he does get a lot of use out of it. And so if it works for him, like I'm happy to accept that mathematicians.
There's no statistician, but they have statistical assistants. Maybe it's
Yes.
the same. Yeah.
I can't actually tell you if that's because statistician is not a separate job and it gets lumped in under like some sort of scientist of some kind, or if that's lumped here under statistical assistants. I'm not sure. Yeah, but a lot of these jobs are pretty intuitive that you'd expect them to be impacted by this sort of technology. On the bottom end, these are just alphabetically sorted because there's lots of them that have zero exposure. It's just lots of physical jobs. So surgical assistants, what else do we have? Terrazzo workers. I don't know what a terrazzo worker is, but and tire builders, like just lots of physical jobs where large language models obviously are not going to be particularly helpful. Okay. What are these jobs like that are more exposed? So one thing that's interesting relative to past automation trends is the fact that they tend to be higher paid jobs. So if you think about past waves of automation, so robots, for instance, in the 90s and 2000s in factories, a lot of early computer automation tended to replace jobs that were either on the lower end of the salary scale or sort of on the middle end in terms of routine cognitive jobs. In this case, this technology ends up being much more impactful for highly paid occupations on the legal end, management, computer scientists, and so on. With the one exception being office and admin support as the big outlier here, where it's highly exposed, but it's not a high salary occupation to begin with.
There are probably data on years of schooling, right? You could do a profession on average years of
Yeah,
schooling,
you
college.
can kind of map this into schooling. Yeah, that's right. That's a good point. And then we can also map this into different skills that are involved in these jobs. So one standard way people tend to decompose this is into cognitive versus non-cognitive skills and routine versus non-routine skills, and whether they have an interpersonal dimension. So the most impacted skills here at the level of different occupations tend to be occupations that involve a lot of non-routine cognitive analytical skills, so sort of the most complex analytical skills, and also routine cognitive skills, sort of like routine admin work in a white-collar setting. Jobs that require interpersonal skills or manual skills tend to be a lot less impacted by these technologies. All right. Okay, so now we have it at the occupation level, and now we want to aggregate it up even further to how much firms are exposed. And so we do that by looking at firm structures from LinkedIn. So we look at who works at different firms on LinkedIn, by map those into occupations. We use data from a company called Revelio Labs that provides these LinkedIn profiles. And so for each of large companies that are publicly listed, we can then tell how many people in that company seem to work in different occupations, and using that aggregate these occupational level exposures into firm level exposures. So does your company employ a lot of people that do the kinds of tasks that these technologies make more productive?
Is there a bias in LinkedIn coverage?
Yeah.
It's probably
definitely.
People who have more educated put their profiles on.
There's definitely a bias here where we're probably overestimating the exposure of very blue collar heavy companies, right? Where a lot of the lower end of their salary scale, there are truckers or food frontline food workers, for instance, might not be on LinkedIn. And so those are also going to be less likely to be exposed given the data I just showed you. And so they're probably biasing a little bit upwards for companies that have a long tail of blue collar workers. We're not that worried about it in that a lot of the variation mostly comes from the white collar workers here. And because we're doing this with stock return data, in some sense, the proof is in the actual results at the end of the day, right? If we're finding some predictive value here, that's good enough. The other issue is that there isn't really much better data in the US. The US has a weird thing where administrative data here is not collected at the occupation level most of the time. So even if you have access to Social Security administrative data in the US, that's provided through sort of computer clusters by some of by the census, that doesn't actually give you this kind of data because the US doesn't really collect occupation level data through official administrative sources. There's only one data set associated with the Bureau of Labor Statistics called the Occupational Employment Statistics that collects anything that looks like this. And even that is just a subsample of a couple of firms. And so in some sense, we're limited here to using this somewhat noisy private data source because you can't really get better data.
How about job posting? The job
So
posting. Yeah.
so we do work with job posting at the end. I have lots of other research using job postings, and there the comment you always get is like, well, job postings tells you something about marginal new demand of the firm. It doesn't tell me anything about what your workforce looks like. And I think that's a valid complaint. The other issue with job postings is that you don't know if they're filling those job postings and how many people they're likely to hire. So one problem is that so if someone puts up a job posting that says, we're hiring machine learning engineers, you don't know if that means that they want 12 of them or one of them, or they just put up the job posting because they wanted to signal that they're a growing active company, but they have no intention of actually hiring someone. So I'll work with job posting at the end of this. I'll show you some analyses with them because we're interested in them as a measure of labor demand on the side of firms, but they're not good measures of the stock of your overall employment most of the time.
Yeah, but I would imagine like website like Indeed or this kind of thing. People have a lot of data because even like then I can even see ads for like secretarial jobs or manual jobs and so on. Right? So it covers all everything.
Yeah, the job postings are great because they give you all this rich information on what it is that the firm is asking for, right? So they give you a lot of flavor on what is involved in these jobs. But they are selected that they're not really outcomes at the end of the day. Or they're harder to interpret in this way. All right. What do we find at the firm level? So we find that the most exposed companies are a lot of computer and electronics manufacturers and admin and support services. Like S&P Global is a big administrative company, administrative services company. Of course, there's Microsoft in here, IBM, a lot of big tech companies, because they have both a lot of white collar office work and a lot of programming going on, which are going to be very impacted by these technologies. One thing that was really nice is that when we first came out with a draft of this paper last year, in the spring, IBM announced in the same week that we released our paper, IBM announced that they were going to halt hiring for something like 8,000 back office jobs because they thought as a result of generative AI, they would no longer need as many people in these roles. And so that was nice market validation in some ways of this measure that we're designing here of productivity potential, where IBM also comes out on top.
I don't see like media companies, like
which ones would you expect here, I guess?
Viacom or these kind of things,
I don't know if they're big enough. So this is just that this table's just the top. This table's just the top. This is top 15 of the top 100 here. So in this case, we just included the 100 largest US companies. On the bottom end is a lot of the companies that are moving physical goods and food around. So Starbucks, McDonald's, Walmart, those just have a lot of frontline workers that are less likely to be impacted by these technologies, and a lot of blue-collar workers.
Well, you have Tesla, huh?
We have Tesla in there, but which I think comes out of the fact that Tesla is both large and actually has a lot of just manufacturing workers, right? And at the end of the day, it is a car company. It does have a lot of engineers, but I don't think those swamp the idea that it is a car company. Yeah. All right. So what do we do this? So we now have a list of exposure. What firms are more likely to have a productivity impact as a result of these technologies? And then we were interested in trying to figure out, does this matter? Does this actually change something for those firms? And do markets incorporate this information to some degree? And so what we do is we first tried to figure out, is it even plausible that markets knew about this? And so we looked at public discussions on Twitter of ChatGPT and related mentions of similar technologies around the time period that ChatGPT was released on November 30th. You can definitely see a clear uptick in public attention, right? There was a massive immediate spike in people talking about these technologies. It was not a slow burn unveil. It was really that everyone very quickly realized that there was a big technology shift happening here. This is actually, it's funny, we've presented this before to different audiences and have gotten very different reactions, where some audiences have mentioned that, oh, they thought like there's no way the financial markets would only react on November 30th. The real people in the know, it's all priced in. Like they knew about this weeks in advance. Like machine learning engineers have known this for years already. And then other people will say like, oh, no way people knew about this by November 30th. It took people months to figure out what this was for. No way anyone would have reacted at that point.
You have data on the adoption rate of ChatGPT, right? Like it went up to
We
100
don't
million.
really, we don't have data on adoption rates, right? Because the problem
Oh.
is that it's a lot of private usage, and there's no way for you to link people to their.
I mean, there were some numbers on, that it reached 100 million users in,
Yeah,
in just a matter of a
exactly.
few days, a few weeks, right? So, yeah.
You have that, right? That the usage spikes up very quickly, but we can't really link that to firms in some way. But I think for us it seems pretty plausible that that as technology releases go, this is one that both had quite immediate attention and a shift in public perception of what the value of this technology was, and also came as somewhat of a surprise, at least in terms of the size of the shift in perception here. All right. And so what we do is we look at the stock market reaction around this release date for ChatGPT, and we do the standard thing in finance of just sorting things into stocks, into stock portfolios. So we take a portfolio that we call the artificial portfolio. Those are the companies that we predict have the highest productivity potential, and we take the human portfolio that is the least productivity potential, and we just look at the difference in returns between those. And if you took that long-short portfolio, it would have returned around 0.4% daily during the 2 weeks after ChatGPT release. And the interesting thing is it seems to be basically a level shift in terms of returns. So it's easiest to see in the graph. This is the same graph I showed you earlier, but with an extended pre-period. This is basically a level shift in returns where, as ChatGPT is released, there's this big gap that opens up in returns between these high productivity potential and low productivity potential companies. And that gap just stays wide afterwards. It doesn't continue to expand. It just stays wide. So people seem to be revaluing what particular companies are worth and then stay with that value. There's another big run up here later on in March that coincides with GPT-4, which you could think of as an additional new information about the potential of the technology that we don't study in detail, but it's definitely in line with this idea that these companies have bigger productivity potential. So every time the technology seems to look more promising, their value goes up in relative terms. And it's also important to see that in the pre-period, while there's some noisy up and down, there's no clear trend here in terms of these companies trending up or down relative to the less exposed companies. So we're not worried that these are companies that just happen to always do better or something like that. This does seem pretty isolated towards this particular release window.
I don't recall if ChatGPT was released globally or only in the US initially. And,
the initial release was, I thought, the US and a couple of other countries. It wasn't everywhere, but.
Oh, okay. So then you could have, but I don't know if it matters or not, because then you could have look at companies, in regions where ChatGPT was not available or not, and see if it's an impact. But at the same time, market can anticipate that ChatGPT will be available, or similar technology will be available, like in China.
You would expect that people, at least after the strong publicity after the initial release, that people in other countries would know that this technology exists and could sort of extrapolate forward from there. But yeah, it's a good point that maybe in some countries the salience was less because it wasn't locally available. We do a couple of things to reassure people in academic seminars that what's pretty obvious here with the naked eye is actually there. That this line actually goes up in this time period, where we control for lots of other different risk factors that you could put in there. It's not just driven by the tech sector. So if you take out all the tech companies, this still looks kind of the same. And you can even do this within industries. If you just compare companies within the same industry, you get similar effect sizes. So it's not just driven by, tech stocks did well, and I don't know, mining stocks did badly during this time period. That's not what this comes from. One thing that one should be worried about is what I mentioned earlier, which is that there's this other side of stock market impact on firms that comes from product market exposure, where some firms just produce the kinds of goods that feed into the AI boom, where they're making or contributing to cloud computing software or chips or like Microsoft are directly exposed to the main companies in this boom. And so those companies obviously should also see their stock prices go up. And so one thing we should be worried about is that if we're looking at this graph, maybe it turns out that those same companies also have labor side productivity potential. And so if NVIDIA has a bunch of productivity potential on the labor side, but also happens to do really well because they sell GPUs, maybe we're conflating those two things here, and that's the uptick here that we're seeing. Maybe stock markets are revaluing these AI production companies rather than this broader labor market impact. And so we do a couple of things to try to reassure us that this is not this product market side, and also just to measure how to think about this product market exposure. And so we try to come up with a bunch of measures of what it means to be exposed to product markets in AI. On the one hand, we just count whether or not your annual reports say the word AI a lot. So if you happen to mention AI a bunch before ChatGPT was released, presumably you're a company that has something to do with AI in their supply chain. And so we try to control for that. We look at a list that Goldman Sachs put together ex post of near-term beneficiaries of AI, right? So they sort of looked at the stock price and were like, oh, these companies did really well because they contribute to the AI boom. And so we take that list and say, well, if Goldman Sachs says these are the companies that directly are benefiting because of the AI boom, maybe we'll take those out. And then we also look at a measure of AI skills that the companies had to begin with. So how many machine learning engineers and AI engineers did they have on their payroll before this boom came around, as an indicator for whether or not they're building sort of AI-related products. And what we find is that our results in terms of these event returns to having more of this labor side generative AI exposure are pretty robust to controlling for all these other dimensions of product market exposure.
These are months, right? The -10 is like 1 month before and 10 months after.
No, this is days. This is day before announcement, trading days. So this is about 2 calendar weeks here.
Oh, okay.
Yeah. So this is so this starts to capture the same period shown here in the graph. So these 2 weeks.
Okay, 2 weeks.
We've played around with different windows here, so it doesn't really make if you extend the window, you get slightly weaker results, as you can sort of see but it still becomes true that you get significant. It's a significant positive uptick. And you don't find any results outside of this window. So if you move the window to a different side, you wouldn't find a result. Okay. Then one thing we were interested in was whether or not all companies are likely to benefit. So are there some prerequisites you need to be a company that can benefit from generative AI, at least based on this stock market reaction that we're seeing? And so it might, I don't know if this is obvious or not, but I think it is an intuitive assertion that data is an important input for generative AI, or at least the ability to manage data at a company level. So my mental anecdote always comes from working in consulting at some point and talking to Midwestern tire manufacturers, where there were basically 2 people in the entire headquarters building who knew how to use SQL or do anything more complicated in Excel. And if anyone else needed something complicated done in Excel or needed to pull some data, they needed to call these 2 people and wait for them to free up 3 days later, and then they could pull some data. And so if you're in that kind of company, you're not likely to build a generative AI pipeline overnight that's going to automate your business processes, right? If people can't handle any data to begin with, they're not going to be building these data pipelines in order to automate their business. And so those businesses are a lot less likely to be able to get a big value impact due to generative AI, just because they're not going to realize that value anytime soon. And so we try to measure this dimension of what businesses are data ready in some sense, what businesses have existing either data assets that can be combined with large language model capabilities, or which businesses have better data management capabilities. And so we try to measure this in 2 ways. On the one hand, we let a large language model loose on some annual reports and give it a very structured prompt to try to figure out if these annual reports mention one of 6 data-related topics. So do they talk about data in the company's business description? Do they talk a lot about their data collection mechanisms or their data infrastructure or data privacy? With all of those being indicators that the company is managing a lot of data. And we generate a score from that, from these automatic assessments of annual report language. And then we also use what I think is a pretty neat insight from some other researchers, which is that one nice proxy for whether or not you're managing a lot of data is whether or not you have a lot of data managers. And so we look in your employment structure on LinkedIn to see if you're employing a lot of people whose job is normally associated with data management skills. And so if we see you having a lot of data managers in your employment structure, we're assuming that you probably have a lot of data to be managed. And what we find is actually that our abnormal returns, so this outperformance of companies during the release window, is almost entirely driven by these companies that have access to a lot of data. So that either seem to have a lot of data as suggested by the language and annual reports, or that are already employing these kinds of data management occupations. And so that seems very intuitive in that to realize the value of generative AI, you need some data management capabilities or proprietary data to combine with this technology. It also makes sense in terms of thinking about competition dynamics, where if we think this is a general technology, why should incumbents that are listed in stock markets realize any kind of outsized return? And why isn't this all competed away by agile startups coming in and eating the incumbent's cake? And the one explanation would be that the incumbents have access to large data sets that the startups don't have access to. And so if a lot of the value is realized by combining these LLM capabilities with existing proprietary data, that will benefit incumbents more, and it explains why the returns here are non-zero.
How about just like IT spendings or IT investment? Like,
IT investment is really hard to observe. It's
you
can't tell. You can just in most accounting data, you can just see investments. I don't know if they're using it for IT. Yeah.
Maybe from the annual reports, no, or the 10Ks, or the
no, even in the annual reports, they do not break out what the purpose of investments is. That's actually a project I'm working on. If you can use large language models to tease out companies calls what it is they're investing in, they wouldn't talk about the annual reports. The annual reports tend to be a little too sanitized in my mind. It's too much written by lawyers, but the earnings calls sometimes have more of a what they're investing in. It's a good idea.
Cloud, companies, sometimes companies are very happy to go on the cloud or do this kind of, to say this kind of things, right? You can see like,
all right. So that's the impact on firms, right? So firms seem to benefit on average, but mostly if they have access to these data assets. What's happening to workers? So with workers, the important question that people have been batting back and forth is whether or not it's substituting or complementing for workers, right? In some sense, like, can generative AI be used instead of some of your existing employees, which would lead to lower labor demand and lower wages? Or can generative AI only be used by your existing workers, making them more productive, maybe taking over some of their less important tasks, and thereby enabling them to do more for your firm, which might actually increase your labor demand and wages for those particular roles? And we try to make some progress on measuring this. So the problem is, how do you distinguish the substitution versus complementary angle? And we do this by distinguishing between different types of tasks that might be impacted by generative AI. And these are called core tasks and supplemental tasks. And there we actually rely on another data set from the same data source where we're getting these tasks from, where these occupational experts have classified if this is the kind of task that is highly relevant for the value that you're generating to the firm, or it's the kind of task that is usually done by you, but isn't really that essential for the kind of value that you're providing. So in my setting, for instance, for an academic, the way I think about this is that grading papers or submitting expense reports for conference travel are not core elements of what I do. And if those things get made more productive by generative AI, that would be wonderful. I can focus more on research and teaching. And that would probably make me more valuable in terms of my job. On the other hand, if generative AI means that one professor can do the teaching of 5 and can take over all my research from me, I'd probably be a lot more worried about my job and labor demand in this case. And so you should think of this distinction as being between these tasks that you do, where if they went away and the AI took them over, you could suddenly focus on the stuff that actually is important. Versus the task where if generative AI can take them over or can make your colleague do them for you, you'd be very worried because it's suddenly unclear what value you're providing. And so we measure what share of your tasks for a particular worker, what share of your exposure to generative AI comes from these supplemental tasks versus these core tasks, with the prediction being that if your exposure comes from these core tasks, you'd expect a more negative impact on your labor demand and wages, and if it's a higher share comes from supplemental tasks, it should be less negative. What do we find? So we look at whether or not firms reduce hiring for the kinds of roles where we would expect generative AI exposure to be larger. So now we're breaking out this job postings data that you mentioned earlier, and we just look at whether or not firms post more or fewer jobs for the kinds of roles where generative AI exposure is larger. We, on average, find negative impacts here. So the firms slow down hiring or reduce hiring for the highly exposed occupations. So it looks like on average that's bad for those workers. But if we break this out into jobs that are only exposed in their core tasks versus jobs that have higher exposure from their supplemental tasks, being exposed only through your core tasks is even worse for you, and that's mitigated a lot if your exposure comes from these supplemental tasks. So you should read this as this positive coefficient here is added to this negative coefficient if you have a lot of supplemental tasks.
So these are data from 2023. Is that
yeah? So this is
after the release
I guess I don't have it on the slide here. It's the our data runs through August 2023.
August.
So it's about the first 3 quarters after ChatGPT is released. And then we find mirror images of this in profitability. So this is nice support for the fact that we actually see these stock prices respond, right? So profitability seems to kick up, particularly at firms that have more of these exposed jobs, and particularly if those jobs are exposed in their core tasks. So there's a higher likelihood that you might actually replace those workers entirely. And there's less of a profitability impact if only the supplemental tasks of your workers are impacted. We can do the same thing then for our stock returns. So here you find the exact same mirror image. The stock returns that I showed you earlier were positive, but if we break this out, they're more positive for the firms where the workers' core tasks are impacted. And then we can also do this from the perspective of workers nationally rather than at a firm level. What happens to their wages? We can't really measure wages here at the firm by worker level. Firm by occupation level. As I mentioned earlier, this doesn't really exist in the US as a data set. And so we do this nationally and just look at whether or not wage trends are different in occupations that we would expect to have more exposure. And we find if the mirror image of these results, we find very negative wage trends and job posting trends at the national level for the kinds of occupations that are more exposed. But those negative wage trends are mitigated if those workers have more of their exposure coming from these supplemental tasks that are not really addressing their the core value provided by those workers.
That period is a bit tricky. I think you try to control for it because we are like in a period where, like, for instance, tech firms have been like over hiring.
It's tricky, yes.
During COVID, and they've been like, like laying off a lot of people during that time period.
It's tricky. So that's why if you so one thing we do here is so we include
fixed effect or something. Right?
We have lots of fixed effects here for what month this is in. So is this just general monthly trends for overall trends at the firm? So firm fixed effects, and then overall hiring trends at the firm. So we want to make sure that we're not just picking up that these are bad firms that generally employ these kinds of workers. And we try the same for the national hiring. We try to control for month fixed effects. City fixed effects, are you just in this kind of city that has declining wage trends or something like that? But yeah, there's always some possibility here that there's some residual thing that's just about this particular trend. It still is comforting for us that somehow our like grassroots measure of how exposed are you to these trends seems to be picking up something important here for this time period. So yeah, I wouldn't claim that any one of these results is sort of slam dunk unassailable, but I think as a totality, they tell a quite consistent story of this sort of differential impact on different kinds of workers.
It's still valid outside of the tech sector, right? You find like in control for industry, you find the same pattern.
Yes,
right?
Exactly. Right.
How about healthcare? What does healthcare fall? Yeah.
I don't know. I don't remember exactly what was going on in healthcare. I mean, my intuition would be that healthcare is going to be a lot slower in seeing anything here, just because the adoption is a lot slower and much more uncertain and more regulatorily driven. So I don't know what the exact differences are. I think one point I'd also make, so to summarize, is that while we find these large impacts on firms and on workers, and those differ a lot in terms of heterogeneity, right? There's some firms gain as a result of having more data, and some workers lose more than others if they're more impacted in their core tasks. There's an important caveat that we're looking at short-run outcomes here, and I'd expect in the long run for these outcomes to look quite different, just because in the short run firms are more restricted in terms of restructuring their overall production processes. So you're more likely to get what's sometimes called so-so automation, where you're taking one particular process of your current value chain, plucking it out, and just putting in some automated component there. And so in that case, you're less likely to realize value for the workers, right? You're just replacing a task that was done with a different agent doing the task. Whereas in the long run, you might be more likely to restructure your processes and actually try to make sure that you're getting maximum value from the fact that workers suddenly don't have to do these particular tasks. You can create new occupations that complement these kinds of technologies optimally. You can reshuffle workers into new, more productive jobs. And so I'd expect in the long run, these job impacts to be less negative in many ways. And also maybe for this this outsized value for companies that have access to proprietary data to be competed away more in the long run.
What do you expect from your AMH portfolio on the long run? Do you see like risk premium, or
So it's a good question. So that was what. So when we first started out, that was what we were looking at, whether or not this would be a long run. This portfolio would have long run higher returns, right? But that's not what it looks like to us. So we actually find that outside of the narrow event period that we're looking at, you don't see any outperformance for the exact same portfolio. And that makes sense to us if we're thinking about this as a shock that revalues what those companies do. It sometimes makes them, it's a one-off shock to making them more valuable, and because it suddenly means that a task that they need to get done gets done for free in some sense, at least partially. But it doesn't mean that they should have outsized long-run returns, because those would have to be justified by investors taking some sort of outsized risk, right? So if in a financial setting, we're thinking about returns only being commensurate with some sort of additional risk that you're taking, and at least in this current period, it's unclear what risk you'd be taking with those particular companies. It could be that you're more exposed, for instance, to these technology shocks as an additional risk, but at least for now, it looks like this was a one-time revaluation, or a revaluation that coincides with these technology revelations rather than an ongoing higher return, higher risk characteristic. Someone raised their hand.
Yes, yeah, go ahead.
Yeah, go ahead.
Hi, I have a quick question, and maybe I misunderstood. Okay, I want you to go back, if you can, on your slide about profit.
Yeah.
Because when I was looking at your slide about profit, I had the feeling that the profit was much lower than what I would have thought.
Okay.
And in fact, I was just wondering when I look at the numbers, but again, I'm not an expert, okay? Yeah. If really with such little profit, should I go really into all that risking process? I go further than that. You see what I mean?
Yeah, so I mean the profitability here, to interpret the numbers a little bit. So the generative AI exposure here is going to be measured in percent of your tasks. So it's going to be a number like 0.3 or something like that. And so this would say that your profitability went up by something like, if you apply 0.3 to this, maybe like 2-ish%, a little bit below 2%, for firms that were average exposed to generative AI. Is that a little or a lot? It's interesting. So I was just at a finance conference where I talked about this paper, and people's reaction was like, "Oh, I would have expected the profit result to be 0." And the reason is that you'd expect that in the short run, there's a lot of costs involved in revamping your processes to install this new technology, right? You need to hire a bunch of AI engineers, install some GPU servers. And so in the short run, you'd actually expect there to be a lot of transition costs towards this new technology that would lower your short run profits, even though your long run profits might be higher. And so given that we're looking at the first 9 months or so after the initial release, where we're definitely still in the implementation period, you might even expect the profits to be negative, and that might still be consistent with the stock market reaction we're seeing, because what the stock market is pricing is these large future potential productivity improvements and profitability improvements, not the short run profitability that might be associated with a big short run cost of restyling your processes and investing in all these new tools. Yes.
Okay, so I'm sorry. Yeah. So just to be clear, in fact, that profit represents what exactly? The profit that the company per worker is going to do just at T0?
No, this is the profit. This is the profit.
The whole system gets introduced and shake up with the whole data of the company. I mean,
no, this is the profit. These are the profits that we observe empirically in the quarters after ChatGPT is released. So we look at their accounting data, and we look at Q1, Q2, and Q3 in 2023, and we see that their profits for these companies that have large exposure to these technologies, to the productivity benefits, their profits seem to be higher in the subsequent quarters after ChatGPT is released.
But this is a bit strange, right? Because it's very unlikely that they have adopted ChatGPT, right? In that time span, right?
That's the point I was trying to make, right? It's just like in some sense, like many people's reaction to this is, oh, these profits should be 0 or negative. But your reaction could also be, why are they so small? I think it can kind of go either way. It turns out if you look at the time pattern, most of this reaction, most of the profit uptick comes in the third quarter. So as you would expect, it takes them at least 6 months or so to get some places. Yeah, but it does go hand in hand with the hiring reaction that we see, right? So if they reduce hiring for particular roles or even lay off people, that might justify some of these profit reactions. So what these profits might show is not that they have in the short run already built these amazing AI systems, but it could be that they have laid off people in anticipation of building these amazing AI systems.
Okay, thank you.
How about the impact on the economy, on productivity, GDP, and so on? Is it
that might be a question for a macroeconomist. So that's one question we've been trying to think about. Can we put a number on this, right? Just like, how big is the impact here? And there's one important thing that is hard, which is that it's easy to see in the picture, I guess. So if you're thinking about what we're measuring relative impacts, right? We're always comparing in these analyses because we're worried that everything else is not equal, right? There's lots of other stuff happening simultaneously. We're always comparing companies here that are more exposed to companies that are less exposed. The problem is, if all companies actually see a big bump up in terms of their value in the world as a result of these technologies, it's just that some companies do a little bit better than others because they have more value. In our analysis, that would look like a small relative impact, even though the overall level shift might be very large. It's just that in order to make this design as close as possible to picking up some causal effect here, we're in some sense by necessity blinding ourselves to overall impacts to all companies simultaneously. And so if both of these, in some sense, if both of these stock price lines are higher now than they would have otherwise been if ChatGPT didn't exist, we wouldn't really pick up on that because we're interested in the relative gap here, or at least that's the one where we can credibly claim some sort of estimated effect that we're measuring. Yeah, and so it's hard from our analysis to try to extrapolate to overall economic impacts as a result of this, because it's sort of by definition designed not to have this effect.
I can see that there's another natural experiment. It would be the EU AI Act. So like in Europe, they want to have they have a incoming regulation on AI, and the US doesn't have that. So it'd be interesting to look at the impact of European companies versus US companies, and
you can. Yeah, one could look at the relative markets there, but then national comparisons are rough, right? Because there's lots of differences in expected regulation over time. There's some sort of dynamic path of future profits as a result of regulation being tighter or less tight. There's an interesting study. So one study that does this a little bit is, I see a study that does this for Italy, where Italy was initially very negative.
They banned ChatGPT.
And banned ChatGPT for a couple of months. And so what they do is they look at what happens after the ban. They sort of do the reverse of what we're doing here. They look at when ChatGPT gets banned in Italy, which companies see their stock prices drop. So you'd expect like all these companies, like they're doing really well, they're very excited about ChatGPT, suddenly it gets banned, what happens? And so people find that developer productivity goes down during this time period. And also companies that you'd find more likely to be, where employees are more likely to be using these tools, see their value drop after it gets banned. But again, the hard thing there is that the ban is for ChatGPT usage, not for internal tools that kind of look like ChatGPT, right? They're not banning the idea of ChatGPT is the way I'd put it. And so with technologies, banning a particular version of it or a particular user interface for how people are accessing it is not necessarily the same as what would the world look like if this technology wasn't known in some ways. Especially I think a lot of the open source variants of this now mean that in some sense it would be irrelevant if ChatGPT was suddenly banned, because everyone can just roll their own Llama 3 on their own servers. It'd be a bit of a transition cost, but it wouldn't be that traumatic for overall economic impact.
Going back in time, are there like equivalent like episode like that? I don't know, like introduction of the iPhone or dot-com boom or this kind of thing?
Part of the motivation for this paper is in our introduction is that we argue to people that there aren't, and that's why this is actually an important period to study. Because what tended to happen is that for past technologies like spreadsheets, for instance, like people will talk about like spreadsheets were a big change in how businesses operated in some ways and were a really important technology. But they were rolled out slowly over a 10-year period or so of slow adoption across different areas. And so there's no way you could pick up this sort of rapid stock price impact or behavioral impact on firms, just because you would it would be so hard over a 10-year window to see any distinct changes that wouldn't be swamped by other events happening over those time windows. And so there's something unique about ChatGPT in that it really garnered this almost instant recognition and excitement in a way that people could see productivity potential almost from the get-go without and could realize the productivity potential. I think the important thing is that, so in 2023, when I talked to some people about this project, some people who came from the machine learning area would be like, oh, we knew about transformers for like 4 years now. What's novel about this? Who cares? Like ChatGPT is just a transformer. I've been building transformers since 2018, right? It's just like, and people would basically dismiss it as like, what could be novel about this? And it turns out that the user interface is the novel thing. It's that literally anyone without a computer science degree could just fire up the website and like 20 seconds later get use out of it. And I think that was an important that speed from tool initiation to actual utility is quite amazing and quite different, I think, from previous technology trends.
I agree with you. I think it'll be in textbooks, history textbook that 2022 introduction will be of, I don't know if it's the first AGI, but at least really like making AI mainstream. Maybe the last question for you. So what's the next step in that line of research? What are you thinking of doing?
So I'm working now on a project related to broader impacts across cities. So my other research leg academically is thinking about real estate markets. And so one thing I'm working on is trying to figure out what does this mean for different cities in the country and different labor markets. So which cities are likely to benefit from this? Where are these jobs located that are more likely to be impacted? And also where are the companies located are more likely to benefit from the product market side, but also are less likely to need are more likely to have a productivity impact on the labor side. And so break it down geographically.
Countries are also concerned about this, right? Some countries want to have, like I'm French, so like in France, they are very concerned about, have to catch that AI wave, and what kind of policy, industrial policy to follow to encourage innovation, startups and so on.
It's interesting, I think, how in some sense what we observe at an individual level of some people being a lot more excited about this new technology than others maps into country level enthusiasm as well. Or I feel like there's some European countries where they're sort of naturally averse to new technologies. I think I'm originally from Germany, and I think of Germany as being a very skeptical country of any sort of technology, where the first reaction was like, is this safe? Can we regulate it? Can we make it forbidden and then maybe allow it for under some very limited framework? Whereas the American attitude of, oh, it's a new thing. All right, over the weekend, we're all going to start 3 new startups and just, kick the tires on this and see what we can do with it is very different.
It's interesting because you had that computer scientist, you heard of him probably, that, I don't know what you say, his first name, Gregor Schubert. He's a very famous AI scientist, and according to him, he has invented everything in the 1990s. But he's very high profile, like AI scientist, a German. But because German research doesn't get as much exposure as the research done in California, Silicon Valley, so he doesn't get the recognition that he deserves. But a lot of things has been done in Europe,
Yeah, but I think that is one difference too. That in the US, you don't have AI scientists sitting around and sitting in their university
labs
researchers
or that,
wasn't
yeah,
saying,
yeah.
oh, I invented this technology and no one likes it, and why isn't someone reading my papers? People just go out and start companies, right? Like people are
That's
just like,
true.
okay,
That's true.
no one wants to play with it, I'll play with it. Like,
Yeah, yeah, yeah. Okay, thank you very much, Gregor. It's like a fantastic work. I was very impressed by I read the paper. Like, I can imagine the number of hours and so on, you know, you spend on it, and well, you are helped a bit by ChatGPT. It's also a very novel way of using AI, right, to do economic research, right? It's I think it's very path-breaking, and I hope to see more papers like that. Okay.
Thank you.
Okay, thank you very much, and thank you all of you. And next time in a couple of weeks. We'll have something about a topic about the topic will be Europe, tech, and war, like how Europe can do can foster AI and new technology. Okay, thank you very much. I'll talk to you another time. Okay, goodbye.
Thank you. Bye.